Good morning, everyone. All right, let's talk about mortgage rates since the Bank of Canada cut earlier this week. Fixed rates have not moved lower, which is not surprising for people that know how fixed rates move. And I want to explain to you what's going on in that area. So when the Bank of Canada cuts interest rates, especially when they cut aggressively, like 0.5%, is actually stimulative to the economy. So it creates inflation. The fixed rates are based off of the bond market, specifically the 4 and 5 year. And so when they cut rates, it actually is stimulative for inflation, and therefore those rates, the 4 and 5 year, actually go up. Now, those rates will fall if the Bank of Canada is chasing a collapsing economy. Because if you think about it, they're behind the ball. They need to catch up. So if they're behind the ball, that means inflation is dropping because the economy is cratering. And as they cut interest rates, the fixed rates will move down lower as well, because the bond market's thinking, no, the Bank of Canada is way behind the ball on this, and inflation is actually going to still keep falling, even though the Bank of Canada just cut. But once the market believes that the Bank of Canada is being proactive or is cutting more than it needs to cut, the bond market, the bond traders are going to think that these moves are stimulative and inflationary. And therefore the fixed mortgage rates are either going to go sideways or go higher. And that's what we saw this week. Compounding the problem or making it worse was the fact that we saw slightly higher inflation data out of the US. So the market is still starting to wonder if we've seen a local bottoming effect in inflation in the US, and potential risk for it to move higher from here, which would also create fixed rates to move higher in Canada. So those are the two reasons why fixed rates did not move lower this week after the Bank of Canada cut 0.5%. What do I see going forward from here? Well, that's the big question. And I really do believe that the Canadian economy is in big trouble. We have some major headwinds coming our way. And I think the Bank of Canada sees that. That's why they're cutting so aggressively. So there's going to reach a tipping point where all of a sudden companies start to lay off people, and we're going to see unemployment probably spike up towards 10%. And that's probably when you're going to start to see fixed rates really move lower, because then the market's going to believe that the Bank of Canada either has to cut more aggressively or keep cutting, or that interest rates are going to sit on a very low level for a long period of time. And at that point, the fixed rates will drop. So that's what I think is coming down the road, but it's very uncertain in this world we live in today, especially with the administration south of the border and the wars going on over in the Middle East. It's just very uncertain, so you never know. Have a great weekend. Take care.